Good morning, everyone, and thanks for joining us today. My name is Helen Ruff, and I'm the head of content here at Insurance Nexus, and I also head up the majority of our European events. For those of you who are listening who are unfamiliar with Insurance Nexus, we've been around for about 4 years now, and we produce reports, webinars, and events on a global scale for the highest echelons of the insurance industry. This webinar today has been produced in conjunction with one of our events, Insurance IoT Europe, which is taking place on the 26th, 27th of June in London. It's Europe's biggest connected insurance event with 350 attendees, 50 speakers and 4 tracks. And the webinar is a great taster of what you can expect at the event itself. When I started looking into IoT and started looking into this area about 6 months ago now, I was kind of overwhelmed by the enthusiasm that the industry has for this topic in this area, and it's really rubbed off on me. And I have to say that the event and the webinar and this whole space has actually been such a joy to put together and a joy to be looking into, because I genuinely feel lucky to be working in an industry which is undergoing such a massive transformation at the moment, and especially when a lot of that is coming back to the customer and customer engagement and customer centricity. I personally find it fascinating, and I hope you do today as well. So for the webinar today, I have a couple of quick updates for you. Sadly, Diogo Franco from Generali is unable to make it, but he's kindly sent his colleague, Nada Al-Masawi, who's Head of Innovation for MyDrive Solutions, which is part of Generali, in his place. So thanks for that. And also, Tim Marlow from Ageas, sadly also can't make it, but has kindly sent us a short video, which will give you a quick insight into his perspective on the issues we'll be discussing today. So in a second, I'm going to hand you over to our speakers today, each of which will be making a short presentation with a couple of slides, so you'll be able to listen to them and view the slides. And then after they've all made their presentations, we're going to take some questions from the listeners. So during the course of the presentations and throughout the webinar, please use the chat function or the box that appears on your screen to enter questions, and I'll endeavour to get as many of those answered as possible. However, saying that, we've had over 1,000 people sign up today for the webinar, so I'm going to do my best. It just goes to show with such a huge audience how hot this topic is right now. Right, without further ado, let's get started. Pierluigi Fasano is Head of P&C Architecture at Swiss Re, and he's our first speaker. So, Pierluigi, over to you.
Thanks, Helen. Thanks also to all the people attending. So, I'm in charge of enterprise architecture for property and casualty, and for those that doesn't know, Swiss Re is the global leading reinsurer. We are more or less a business of 35 billion gross written premiums, so with a net profit of around 4 billion. So in my presentation, I'm going to give you mostly a couple of information about why we think that IoT and artificial intelligence, there is very little possibility to disconnect these two things, are going to make a huge impact in insurance. This is the kind of world that where we are in. So it's a world which is connecting more and more, and there are no signs that this is going to stop. So what are the, I'll call it, implications of this hyper-connected ecosystem is something that we have spent quite a certain amount of resources in order to understand. So one of my jobs in this activity is also trying to understand what is real, what is not. So I would say that in other terms, you know, I'm the one that has to give the red pill about the implications of such kind of transformation. When we look to the, I'll call it the fundamentals of the business of insurance, we see that basically risk is tightly connected to premium. So you pay in some way for the type or for the amount of risk which is implied into the insurable object. All of this technology, from one side, have a fantastic engagement with consumers, but from the other side, of course, create a much safer environment. Think about, for example, what has been discovered just recently during the investigation of the national authorities in the US following the crash of Tesla. So they discovered that when running in autopilot, Tesla cars have more or less a 40% less crash than the normal operating mode with the human driver. So all of these things we are just going to increase over time. This is leading to the reflection that, of course, in this kind of situations, technology is creating for us as an industry many more touch points with the consumer, and this is fantastic. The less fantastic information is that there are many other players who are typically better positioned than an insurer in order to profit firsthand of these new touch points. In this kind of things, insurance basically is facing, how we call it, the dilemma. There are the newcomers, big tech players, typically, which are taking over not only the technology itself, but also the risks which are embedded in those technologies, and they can even make it part of their value proposition. Again, I think it's no mystery to what Tesla is doing about promoting a custom insurance model, which basically takes into account the specifics of their car and try to value those safety features into a substantial discount into the premium. One example is that you are going to drive, basically when you are driving in autonomous mode, there is a substantial reduction of the premium real time. So it's clear that for insurance, this is a kind of a wake-up call. We need to decide where to go. There is from one side, we can go, how we call it, south, and we can decide to retrench into what is the traditional insurance model, basically a kind of balance sheet game, where we carry on just the risks in terms of balance sheets. We typically deal with solvency 2, 3, or whatever else. Or we move into a much more engaged model. And this implies that, of course, it's not about anymore putting just a price to a risk or paying a claim, but we need to add a lot of services in order to engage with customers. So this is what we see as connected insurance. So the shift from claim settlement, so something happened and we are going to see how much we are going to pay for that, to basically helping people to manage risks so that we can avoid any claim and basically improve their lifestyle. This is the major transformation we see, and this is what we are really keen to work on. Just to put it in a nice graphical terms, what you see here is just a simplification of the idea that from one side there would be things going down, but on the other side we have a huge opportunity to build up on this new technology, both bringing in new type of risks, things to cyber, things to product liabilities and other things, as well as innovating on the product side with a new generation of products based on the lifestyle of people. For all of this, IoT and artificial intelligence, together with the services, plays absolutely a fundamental role. What we are doing at the moment is to evaluate on the basis of a very simple framework how to enable this. What we discovered over time is that, for example, there is a lot of talk about predictive models, which is absolutely fundamental, but predictions without actions tend to become quite irrelevant. So especially when you want to engage someone, engage a customer, there is no worse things probably than just giving out information or predictions with no ability to act on it. So this is why we created these, let's call it wheel, where we start from sensing and we move towards predicting and acting and learning. Just to make some examples about what is going to be the type of products in the future, we can imagine situations where, for example, looking to elder people, there is a general tendency to keep the people in the house. So this is important for social aspects, it's important for also national payments. So national health system cannot deal anymore, with putting people, let's say, in a kind of managed hospitality. Another side is also that people do not have enough money to put other people into retirement places. So one example about understanding things to another level is we started a case from the University of Tokyo, I think, in Japan, where basically they monitored in a clinical trial elder people to basically find what could have been a good predictor of their stress level. Stress level is considered a very good indicator about the probability of getting in a situation of sickness or an accident. Interestingly enough, without thinking to very complex things, the two best predictors that combined together were giving the best results were the fridge and the kettle. So by monitoring the patterns of usage in terms of opening and closing of the fridge, as well as the utilization of the kettle, they were able to get a validated clinical trial result in terms of ability to predict their stress level. So this is a good example of how far we can go utilizing this kind of technologies like IoT and bringing in a different type of signals and using artificial intelligence to derive higher value outcomes out of, I would call it, poor signals. So this is where also can be combined together with basically a set of services. You can think about, of course, engaging the family, which typically is the caregiver. We are analyzing other type of scenarios which goes into this direction. Think, for example, of course, as a home. We tend to refer to smart home just as a home you can remotely control. From our point of view, smart home becomes a home that can help you to get things done, can prevent the risks which are typical inside the home. And if you think to the scenario like this, where, of course, there is someone just cooking, and you realize how many fire claims are related to people just cooking or using cooking in a wrong way. So, of course, this puts us in the position to be able to help them to prevent some of the stuff, or to easily, I would call it, make intervention in a faster way. From that point of view, there is a study which, for example, monetize to nearly $3,000 per minute the value of the time of intervention. So this makes also much easier to find business cases where you want to understand how to justify certain investments, for example, in small hardware or sensors that you want to put in specific points of the home in order to help the people. I'm closing with, how call it, the note that has to be there. So when it comes to security, I mean, you have to be just paranoid. There is never enough security around these things. This is the area where we are putting most of the effort. I mean, these are just some data, but of course, I mean, you have basically every week nearly something on the newspaper coming out with problems, or, for example, the recent breach of the internet by using a botnet attack through IoT things. In this area, I think this is the area where probably most of the solutions will grow over the next 2 years. All in all, what we see is that there is the possibility, by using this technology, to really bring value in each and every single step of the value chain, as well as on a more general basis. We think that this is the way to narrow the protection gap, to basically increase revenue per client and enlarge the insurable base. So this is not about just making, I would call it, premium discounts, just in order to sell technology, but it's the other way around, trying to find solutions that really help people and can bring more people into a protection game. I think that this is whole, and I will look forward to the question and answers to get more into the topics.
Thank you so much, Pierluigi. Great set of slides there. And don't forget, if you've got some questions for him, please use the box on your screen, and I'll ask them at the end. So I'm going to whiz through these presentations now. We're going to move on to Matteo Carbone. Matteo is an InsurTech thought leader, a keynote speaker, and a writer on insurance innovation. Matteo, over to you.
Thanks. Good morning to everyone. I'm really happy to be this morning here with you, remembering all the path we have done in the last 18 months discussing about insurance IoT. I remember the first event you did in Miami, December 2015. In 18 months, I think that the quality of the thoughts on that specific segment of the insurance sector really make a step forward, a fantastic step forward. I will continue the discussion from the point started by Pierluigi. So he finished his discussion showing many opportunities along the value chain. Today I will focus on the sales opportunity. So the cross-selling opportunity, the way to sell something more to your client. 2 words about me. 11 years in Bain. I dedicated my last 5 years to the insurance innovation, to the telematics, to insurance IoT. I created an insurance think tank focused on that vertical, with more than 30 players, insurers, reinsurers, tech players. We are discussing about that opportunity. We are rationalizing which could be the next frontier of innovation. I'm starting the same initiative also in US, so the European initiative is growing. We are onboarding new members, so everyone could be interested to join this observatory. Happy to discuss about that in the next weeks. And we started last month also the North American chapter of the observatory. So many of the thoughts I will share with you today are coming from the discussion I did with all the members of the observatory. So let's start with the client. Last year at the observatory, we did a survey with SSI on different countries about which is the feeling of the client about receiving a proposal for a tailored insurance solution on top to what they already have based on data coming from connected devices. So we was deeping dive the auto telematics value proposition, and I asked the client in the different countries if they was considering interesting a new service they never heard about, an insurance proposal tailored on them to add an additional cover based on the data registered by the device. The answer you see on the slide was pretty impressive. They was happy. They the qualitative part of the answers was, oh, finally an insurer that will try to do the same of Amazon, to suggest us what we need. So the personalization based on the data is something that your client lacks. So I would like to share with you one pilot I have seen running recently. So there is a client that have a device on board on her car and park one night in a different place than the usual place where she parked. Using artificial intelligence, the insurer is able to identify that context and to send a push notification on her phone suggesting a theft or damage coverage for the amount of time she will stay there. She can purchase this temporary coverage for the time she thinks that she needs. So this is done with the support of a startup. I'm an investor in that startup because after seeing that works, I decided to invest. Is Neurons, a company that created an SDK that can be added in any digital customer journey and is able to analyze the context, to digest the different data coming from the smartphone, from the connected device, and also from the social media, if the client opts in some moment with the community where he's interacting, and to send a proposal. And they created a streamlined process that allows the customer to purchase the insurance coverage with 3 taps. They are not an insurer. They are an IT vendor. So they are providing their solution to insurers and reinsurers. Currently, they are accelerated in plug and play in Silicon Valley. So let's see another example and why that approach can be effective on cross-selling. So let's figure out your need to cover your luggage for a trip. If someone are asking you the first day of the year to insure for an amount, your luggage for all the trip you will do, you are pretty unhappy. It's not exciting. It's not something that you know how many trips you will do. The amount that the insurer are asking is pretty big. So it's not a typical coverage that is sold. When you are purchasing a trip, frequently there is a button that allows you to purchase an additional coverage to insure your luggage. This ratio is not so high, but some rational customers say, oh, why not? But let's figure out if someone is able to send you the push notification when you left your luggage to the check-in. You are seeing your luggage go away, and you feel that you are not sure to see your luggage when you will land. In that moment, you have the emotional feeling that if someone proposes you to cover that risk, you will do it. So what is doing insurance is to use artificial intelligence to leverage all the real-time data from connected device, from the smartphone, to understand the context, the preference of the customer, because the artificial intelligence is learning time by time, and to send a tailored proposal. When I think send a tailored proposal, I mean that send at the right time the right insurance coverage with the right message, so to the right person. The approach is the segment one approach. More and more a customer are interacting with the machine, more than machine are learning. So let's imagine what a traditional insurance agent or a traditional insurance broker is doing in his career. He's learning how to sell each kind of insurance coverage to the single person, to the kind of biased persona. Today, a machine can do it and can improve with deep learning time by time. Why I think that is relevant? Pierluigi, before of me, mentioned the protection gap. So, when it's not compulsory, insurance is sold, is not bought. It's not exciting shopping around for insurance. So what I think that will be relevant is how in the future the insurance sector can sell in a more effective way to the customer. Why I think that this will be one of the key areas and one of the key areas to address the protection gap. For two reasons. First, the world is changing, and also the insurers will face less human interaction. So, come back. We told that clients are not going around to look for insurance coverage that are not compulsory. And they will meet less and less salesmen of insurance products. So how we pretend to stimulate the needs of customers that have a span of attention lower than a goldfish? How we think that with digital interaction we are able to make them feel they have a need of protection, and which kind of protection can fit with them. So the rational approach to sell to them, I think that will be not enough effective. So less human interaction and falling attention span will bring a larger protection gap than we know today. And my personal belief is that the digital way to sell insurance we have seen till now are good for a niche of customers, rational customers that are going to look for an insurance coverage. They already decide they want something, but are pretty ineffective to replicate all the sales was done before by agents and brokers, to convince clients, to explain them what they need, to make them feel on an emotional way they have a need, and there is something that can fit with that need. Neurons with a push approach using artificial intelligence and the data from the connected devices can do it. So the massive transformative purpose of the company is to close the protection gap using the technology. In a nutshell, this was the thoughts I would like to share with you about how all the data coming from connected device can enable the insurance sector to sell more and to sell better in the future. Thanks. And I'm available for the Q&A at the end of the webinar.
Thank you so much, Matteo. Thanks for that. So we're now going to move on to our final presenter for today, which is Nada Al-Mazawi. Nada is Future Product and Innovation Manager of MyDrive Solutions, which is wholly owned by Generali. Nada, over to you.
Hi, thanks, Helen. Thanks for inviting me to be a part of this pertinent discussion. Hello, everyone. My name is Nada Al-Mazawi, and I lead innovation for MyDrive Solutions, which, as Helen very accurately said, is a wholly owned Generali company. I guess my position is quite unique, or rather, that is MyDrive's position is unique because we have a great perspective of the tech startup scene, and we also keep our finger on the digital pulse, but we also have the context and experience of Generali. And today I will be wearing both hats, the MyDrive and the Generali hats, because for all intents and purposes, they are one and the same. So the task ahead of us is challenging and exciting in equal parts. How do we transform a 184-year-old industry giant into a 21st century tech-savvy digital insurance leader? So to give you some context, Generali is one of the world's largest companies, top 50 to be exact, and the third largest insurer in the world, operating in over 60 countries with over 70 million customers. We have also been voted as one of the 50 smartest companies by the MIT Tech Review, which in itself demonstrates Generali's commitment to technological advancement and digital transformation. So one of the ways Generali has put this commitment into practice is by acquiring MyDrive Solutions to add to the group's in-house capability. So to give you a brief background, MyDrive Solutions was founded in 2010. And we are a world-leading data science company, and our core product is our real-time granular driver profiler. And this is supported by patents granted both in the EU and the US. We were acquired by Generali in the summer of 2015, and the rest, as they say, is history in the making. Our expertise lies in 4 areas. So data science and software engineering, telematics, behavioral profiling, and of course, the Internet of Things. So we use data analytics and software engineering to deliver highly accurate and detailed driver profiles, which then allows Generali to really understand the context in which their customers are driving, and therefore through a telematics-based policy, we enable risk profiling, pricing, claims, and fraud analytics. But our expertise isn't just limited to motor insurance, but to the wider IoT ecosystem. So we are applying our experience in motor insurance to deliver cutting-edge data analytics in areas such as smart home and e-health. So whatever the context, we operate a virtuous data circle. We collect the data coming from smartphones, black boxes, OBDs, run our data science and what I like to call the analytics magic, put it all into context before delivering better products and services to our customers, and then the cycle continues. Of course, the more data we have, the better and most relevant products and services we can provide to our customers. But there is no one box fits all solution. Generali operates all over the world and serves customers from all sorts of backgrounds. So our task is to really understand the focus and need of each of our customers, and really deliver products that add value to these customers. So for example, one of Germany's primary focuses in terms of telematics is fair use of data and accuracy. So our solutions ensure that we are providing the highest accuracy of location to their end customer. Italy and South Africa, for example, their focus is to prevent fraud, so black boxes are the choice of device for data collection. Whereas in India, the insurance challenge is very much different to that of Europe. So it's a lot more about consumer presence and competition. So India could be a great opportunity, a great testing bed to introduce gamification into our product, for example. So the core product, which is our driver profiler, remains the same, but the configuration and focus changes based on the customer need in different regions. And so the insights we derive from the data is therefore different too. But let's go a level deeper for a moment and look at telematics in Italy. So Italy is one of the largest telematics markets in the world. But even so, the needs of the customer in South Italy is vastly different to those in Northern Italy. In South Italy, vehicle theft is a great concern. So our insurance policies are complemented with black boxes, but it's less of a concern for drivers in Northern Italy, so they don't need to have such expensive policies. And younger drivers in the region can therefore enjoy lower premiums than they would in the South. So back to the exam question. So how is Generali unearthing useful customer insights? Well, for one, we are looking beyond today's operating model and constantly innovating, but also our focus is very much on understanding the customer context, who they are, how they drive, where they drive, and what can we do as an insurer to provide them with peace of mind and products that will add value to their lives, and also how to make our existing products simpler and smarter for our customers. So that was that's the end of my presentation, but I do look forward to any questions that you guys may have. Thanks.
Thanks ever so much, Nada. I really appreciate that, and thanks again for stepping in at the last moment. I do appreciate it. So everyone, we have one quick video here. It's a couple of minutes long, so while we're getting that ready and while that's playing, please send your questions in, and I'll ask them in about 2 minutes' time. So get ready for the... Apologies for that. I'm not sure what's gone wrong there, but we're having a problem with the video. So we're going to go straight to Q&A and see if we can come back to that. So Matteo, Pierluigi, and Nada, if you're all poised to take some questions from the audience. I've got one here from Michael. He says, I think this is mainly for Matteo, so I'll fire this over to you first, but he's asking, how much of a reduction of insurance would consumers see from connected insurance? Matteo, got any comments on that?
As was showed by Generali, we have seen in some markets a growing adoption on auto telematics that is the more mature use cases of the connected insurance. Some market was able to answer to the problem of the customer. So let's figure out discount and service are two great answers. This context allowed the Italian market to reach at the end of 2016 a penetration of 19%, and this shows that the limit is based on how each carrier will be able to address their strategic goal leveraging the technology. This average on the Italian market is based on a couple of big players that have a massive penetration. So we are talking about more than 30% of penetration on their own book, with a goal to achieve 45 in a couple of other years. Other players that are close to 20, then the large part of the market are still experimenting with what will work for them. But this penetration on single player show that the client is ready. It's the insurance sector that need to find on each specific market and each specific context of single company how to use technology.
Thanks, Matteo. So I have another question here. I think this is directed mostly for Pierluigi, and it's a question from Alistair Allison. I'm pretty sure it's related to the connected home. So he's asking, so who do you propose installs the equipment and monitors the output? Is it the manufacturer? Is it the service provider? Is it the insurer? Pierluigi, you got any comments about that?
So there are two distinct situations. So one, I would call it a kind of lab environment, where of course, I mean, every player will do this kind of things started by them. When it comes to go-to-market, I expect probably a mix of these channels with the prevalence over time of non-insurance channels. So what I see coming is even just a natural adoption from consumers, and you need to be ready to basically deal with whatever is already in the home, at least as a starting point. I don't see, I mean, I've seen failures in trying to push too much stuff into the home for several reasons. And I mean, there are much better channels than insurance when it comes to that.
Thanks for that. I have another question for you, Pierluigi. Before I move on to Nada, I may as well, hit you with another one. Here we go. So this is a question from Harry. He's asking, so taking into account the examples that you mentioned in your presentation, he wants to know that what your perspective is on other insurance sectors, so motor insurance, and in particular as it relates to the eCall service, and new cars coming into Europe as from as of next year.
Absolutely. I mean, in cars, is evident the fact that that there will be a dimension of services into that. eCall is just one of them, but basically more and more you will move towards nearly managed mobility instead of just buying the car. So you're going to pay a price for that. So over time there will be more and more a shift towards, I would call it, buying other integrated services. I think that every producer now is coming out also with advanced services based on mobile apps, how to call, integrated black box, all of these things. So more and more, this would be absolutely a source of revenue.
And Nada, I'd like to bring you in on that eCall, that same topic there. What, in your view, would be the effect of the eCall on the auto insurance segment? And that's wearing your kind of Generali hat.
In terms of Ecor, I think it's of course a very important feature and a very important feature as part of our policies. I think that it provides peace of mind to the customer, and essentially that's what insurance is about. It's about customer mind. So I think it's just slowly we are moving into an era where the customer is constantly connected, and I think that this is just another way of ensuring that while they are connected, they're also getting value, and they know that if need be, they are protected in whichever form possible.
Thanks for that. So now I've got some questions for kind of all of you as a group. Let's start with you, Matteo. I'd like to ask all of you the same question, but Matteo, if you could give the first response. So the question here is from Lazarus, and he's asking, what do you think is the future of the agents and the brokers, as it looks like these connected devices will largely take over the job of the intermediaries? I mean, how is that going to evolve?
I think that agents and brokers are here to stay. I don't think they will be replaced soon, and I don't think that the devices will change that. I think that the great impact we have already seen from the device is on case management, on customer engagement, on delivering service. But at the sales point, what you need is someone that explains their services. So if you take a look where telematics gain a massive penetration, Italy is a market that is dominated by agents because they are able to explain that there is a service. If I believe that telematics can work also on comparison websites, but as of today, there is not evidence. Probably insurers have to think about a different value proposition. So the value proposition that worked well in Italy probably is not the value proposition that will work well with comparison websites, because it's pricing based, have not ways to highlight all the service parts linked to the devices. So in my presentation, I was talking about an opportunity to cross-sell. I don't think that an approach as Neurons in the short term will impact in any way agents or brokers. I see that as a great complementary tool to do things that they are not able to do. Is an additional coverage, but you need to create the relation first. So what is sold today, I expect that will continue to be sold by an intermediary. Then their weight probably will go down, but I'm not expecting they will be out like the dinosaur that will disappear from one day to the another.
Thanks, Matteo. What about you, Pierluigi? What are your views on, how connected devices are going to impact the relationship, that agents and brokers have? I mean, you got any thoughts on that?
I think that there will be a shift about who is going to be the broker. So if in a car, could be the sales point of the, Tesla or Ford or whatever, that becomes immediately even the broker. It can even explain better certain type of services that gets attached to the car, or certain features to the car that can become highly beneficial to you in case you buy certain services directly there. So I think this is a possible trend where basically I would call it the role of the broker stays, but change probably place. I see also a complete difference in buying patterns between, I would call it commodity stuff, cars, even home or things like this, from more complex type of liabilities, or even going towards the life and health things. That's a completely different game where I do not see, honestly, such a huge impacts, because there is a lot of explanation, there is a lot of trust involved, and also the type of engagement is probably longer term. So this is my point of view.
Thanks. Nat, have you got any views on that, or would you like to hear the next question?
I think I'd just like to weigh in, and I completely agree with Matteo as well as Pierluigi. I think that the role of brokers in terms of connected devices differs across, well, first of all, I think it's different across geographies, but also I think it's different across products. So for example, in a smart home proposition, I think that the role of an agent or broker in terms of explaining the technology or how it works might work better for someone who is in, belongs to a demographic of mid-40s, children, that sort of thing, which I appreciate is a broad generalization. But whereas a digital native, a millennial, someone in the early 20s, going back to Matteo's presentation about short attention spans, maybe they don't have the patience almost to kind of be sold to. I think the younger generation don't want to be sold to. So I think in conclusion, I guess I think it differs. I don't think that the role of the agent or the broker is going away. It's vastly changing, but also I think in certain geographies, it's increasing. And I think Germany is a great example of that, because you've got like 3 great Generali companies. So you've got Cosmos, GV, and AMV. So the way Cosmos, for example, sell their products, it's purely online. And that's how they target digital natives, whereas someone who's a bit more traditional and sells to an older generation like GEV, they still use brokers and agents to sell the products.
If I can add just one point
yeah, sure.
to what Nada was saying, there is a study showing in a very clear way how this generational gap is also complementary. So older generations understand pretty well, I would call it insurance, and they need to be explained a lot about how technology fits into that, but they have concept about perils, coverages, deductibles, all of this nice insurance language. Where for the younger generations, it was pretty clear what they were looking for also from a technology or what the technology could have done, but they were completely unaware about insurance. So even there, there are a lot of nuances.
Thanks for that. So I have a question here that's kind of directed towards health insurance. So perhaps, Pierluigi, you could take this one first. But would you be able to share some of your perspectives about the idea of the fully connected patient and how you see that evolving?
It's interesting because my background, I was working also in Novartis for some period, so the idea of patient there was slightly different. That's, in general, there is the notion that there is a common interest between many stakeholders to have a connected patient, where a common outcome is if you're going to stay healthy and better, it's good for you, it's good for the national health system, it's good for the doctors, it's good for the insurance company. So this is clearly a space where probably you need to have a perspective which will aggregate the different stakeholders, not just one, also to get the full trust of the people. I mean, an element which has to be considered, especially when it comes to health, is of course the trust element. So who is going to give you advice, for what purpose, with what kind of outcomes, with what kind of, I would call it, guarantees around that. So it's clearly a trend because people tend to live longer, they want to stay healthier. Also expectations of people about health are completely different now than 20 years ago or 50 years ago. But this has not yet, I would call it, metabolized into the ecosystem. We are still too much siloed between the different parties, and this does not allow to really fly high when it comes to the connected patient, as it could be possible. Technology can be there. We made also an investment in one specific company, BioVotion, which is a medical grade type of wearables. But what we see mostly lacking is the entire ecosystem that needs to work around the connected patient in order to really deliver on the promise.
Thanks for that. I have one more question here for kind of all of you, and then I probably have to think about wrapping things up. But very briefly, if you could, the reason I want to ask this is because it came up quite a lot during my research. So the question is, do you think our insurers are more fit to develop their own back-end infrastructure to accommodate real-time data capture and analysis? Or would classical insurance system providers be suitable to provide these solutions? I mean, I guess it's really, do you build it yourself or not? Anyone got any thoughts on that? What about you, Matteo?
I think that a must for the insurers in the future will became able to extract knowledge from that data. I think that there is many areas where an insurer will be able to build a competitive advantage on that will come from different risk model, different will be key the ability to extract knowledge from the data, will be key to control that data. So I believe that all the stuff around can be outsourced, can be done in partnership with someone else, but the knowledge creation is something that will require a lot of insurance expertise to make that raw data, transform that raw data in actionable knowledge. And on the other side is something that insurer will need to protect.
Thanks, Matteo. Nada, what are your views on around that topic?
Oh, this is right up my street. So I agree with what Matteo just said, and I think the insurers are fundamentally they're changing, and I think we've heard this a number of times. In 20 years' time, you know, some of the major insurers may not even exist in the form that they do right now. So I think building this knowledge is paramount, and I think that there is a bit of a data race going on, and you can see that across a frenzy of M&A activity, particularly in 2016. And I think that Generali's acquisition of MyDrive, for example, is a good example of that, of insurers acquiring this knowledge to build their own kind of in-house capability, and slowly, you know, I guess, get rid of sounds a bit negative, but I guess, you know, bring the data away from third-party incumbents, and also because, you know, insurance data, the customer data is sensitive, and, you know, customers, they trust the insurer to do right by that data. And I think that if, as a consumer myself, I think would I be more comfortable knowing that, you know, one insurer has my data as opposed to a number of other third-party companies that are processing it? I don't know, maybe. So I think that to answer your question, Helen, I think that we are seeing a trend towards insurers kind of bringing the technical and technological capabilities in-house and being seen as sort of you know, kind of digital companies ready for the 21st century.
Thanks, Nada. And finally, Pierluigi, have you got any comments on developing your own back-end infrastructure to accommodate all this data?
I'm in the process of building these things, so I have quite an hands-on experience. And my simple answer is no way you can accommodate this internally in terms of infrastructure. Different is when you talk of the core competencies which are sitting on top of that, when it comes especially to artificial intelligence and, you know, some others related to data processing and other things. But basically, if you look to problems like, I mean, I'm working on a very global scale. So if my clients wants to deploy this in Singapore or Mexico City or, you know, Amsterdam, the data has to stay, for example, in the country where they are originated as our choice. So I need to be able to have these kind of capabilities nearly real time, you know, and this is not something that any company as of today can afford other than the big tech giants, and you need to partner.
That's a great answer there. So thanks ever so much, everyone, for their time today. I really appreciate it. And if you'd like to hear more from people like Matteo, Swiss Re, Neosurance, who were mentioned, and then Tim Marlow, who sadly couldn't make it today, then do check out the upcoming conference in June, which is all about IoT. We've got 4 tracks there which look at the home, the car, commercial insurance, and life and health, kind of looking at wearables and also beyond that. So it's you know, if you enjoyed the webinar today, please check out the event. I'm sure you're going to find it valuable. Thanks to all the panelists again, and for our listeners today, you will be sent a recording of the webinar with those slides, so you can check them out again. And with that, it leaves me to wrap up, and thank you all for your time today, and I hope to see you at one of our physical events or have you tune in again to one of our future webinars. Thanks, everyone.